what the banks don't tell us. Imagine walking into a bank. The air is cool, the floors are polished, and the bankers, oh, they look sharp. Suits pressed, smiles rehearsed, voices calm. It feels safe, reliable, trustworthy. Now picture this. You sit down, sign some papers, shake a hand, and just like that, you've entered a relationship. Not with a person, but with a system. And here's the catch. This system knows everything about you. But how much do you really know about it? See, banks don't just hold your money, they use your money. But they'd rather you not think about that. The illusion of safety. Let's say you deposit $1,000 into your bank account. You feel good, right? Your money is safe, tucked away, waiting for you. But here's the thing. Your money isn't just sitting there. The bank is already putting it to work, lending it out, investing it, multiplying it. Meanwhile, if you ever need that same bank to lend you money, they'll ask for paperwork, proof of income, maybe even a blood sample for all we know. And don't forget interest, the fee for borrowing what was originally your money in the first place. Funny how that works, huh? The fine print, nobody reads. Have you ever actually read the fine print on a loan agreement? Those tiny words at the bottom of the page? Yeah, neither have most people. That's because banks don't expect you to. They count on it. The language is complicated on purpose. Hidden fees, rising interest rates, penalties that seem to appear out of nowhere. It's all there, written legally, but crafted carefully to go unnoticed. It's like playing a game where they already know the rules, and you don't. The illusion of ownership. Picture this. You save up, get a mortgage, and finally buy your dream home. You celebrate. You call yourself a homeowner. But are you? Try missing a few payments. See how quickly the bank reminds you who really owns that house. Banks love to lend money because it keeps people in a cycle. A 30-year mortgage? That's 30 years of payments, 30 years of interest, 30 years of you working to pay them back more than what the house actually costs. And if life throws you a curveball, a job loss, an illness, an emergency, well, let's just say the bank isn't in the business of sympathy. Credit scores, the invisible chains. And then there's your credit score, this mysterious number that somehow decides your financial future. A 3-digit number that holds the power to open doors or slam them shut. The irony? It's not really about how much money you have. It's about how much money you owe and how reliably you keep owing it. If you've never borrowed money, banks call you high risk. If you've borrowed a lot but always paid on time, they say, good job, here's more debt to manage. It's a system designed to keep you dependent, always proving your worthiness by staying in the game. So, what's the alternative? Well, here's the part they really don't want you thinking about. What if you played the game differently? What if, instead of saving in the bank, you invested outside of it? What if you built assets that worked for you the way banks make money work for them? What if you became the lender instead of the borrower? It's not easy, and they won't teach it in school. But the people who figure it out, they don't just break free from the system. They change the game entirely. So next time you walk into a bank, just remember, the friendliest businesses don't always have your best interest at heart. And the most powerful thing you can do? Start asking questions. Start thinking differently. Start playing the game your way. Because once you see how the system really works, you'll never look at banks the same way again.